Hello, everyone, and welcome to the AFC presentation of the CARES Act for AFCPE Professionals, Part 2. Our presenter today is Ryan Law. Ryan teaches in the Personal Finance Planning program at Utah Valley University, where he is also the director of the Peer-to-Peer Financial Counseling Center, the Money Management Resource Center. On the side, he also maintains a personal finance blog and helps clients with their student loans through his company, Student Loan Planning. He is the current AFCPE president, and today he will be discussing updates from the last webinar, eviction, foreclosure and forbearance, and small business help.
Great. Thank you so much, Summer. Happy to be here today. So for those who were here for part one, there are a couple of updates and corrections from that webinar. If you have not seen that, just check the chat box, or Summer can give you directions again, maybe at the end, about how to access part one of the webinar. Just a couple of things. So just a reminder, it is a very large bill. It was about 850 pages or so, but a lot of the bill is left up to interpretation by states or departments like the Department of Education or the Small Business Administration. And so almost hourly, you see updates come through, even reliable sources. So I'll point out a couple of those that are corrections from the first one. So the first thing is that direct deposit has started. That's not a correction, it's just an update. We received ours yesterday, for example. I don't know how many others have received their direct deposit, but it has started already, and it should be done by April 20th. They are on track right now to complete that direct deposit by April 20th. After that, the checks will start in about May. So that is they're still going about May through September that those checks will be issued. They said they can do around 5 million checks per week, so they've got a lot of checks that still need to be sent out. There is an update on the website for non-filers. So this is the official IRS website. Last week I gave a website that TurboTax had set up, and originally TurboTax said it was in conjunction with the IRS, and the IRS has said that they will accept anything that was submitted through there. But they have set up their own site through the IRS website. So you just go to this website, and if you are a non-filer, then you can just enter your payment info here. So that is the link, and I've got this at the end of the webinar as well, so you won't have to go back here to get that update. All right, this is a correction from last week. So I mentioned last week that unemployment is not taxable. There was some discussion initially around making the unemployment untaxable for as part of the CARES Act, but that did not end up in the final bill. So just a reminder for everyone that unemployment is taxable income. You will receive it's going to be taxed at the end of the year. You can also have tax withheld, but otherwise you can pay the tax or do that when you do your 2021 or 2020 taxes. You would pay taxes on that unemployment income. Okay, additional updates on student loans, couple of things here. So originally the Department of Education had said that no Perkins loans would qualify for the suspension. However, they have updated it, and they have said now that all Perkins loans that are held by the Department of Education qualify for the suspension. That means that any Perkins loans that are held by the university are still not eligible for the suspension, but the ones that are held by the Department of Education do qualify for that. Also, originally they said that suspended payments would only count towards public service loan forgiveness. They have updated that now and said that it counts towards those income-driven repayment forgiveness, and then any other forgiveness like teacher forgiveness and others. So they count just as though you were making those payments during that time. They also decided to count them towards loan rehabilitation. So if you have defaulted on a student loan, or if you have a client that has, they have to make a certain number of payments. They have to make 9 payments out of 10 on time. They have decided that these suspended payments will count towards that. So in a lot of cases, you're going to have clients who are going to get 6 of those payments done during the next 6 months when payments are on hold, and they are counting those as on-time payments towards loan rehabilitation. All right, any garnished wages or tax refunds that were seized after the 13th of March can be refunded. Now, it is not going to be automatic. So they did backdate it. Originally, it was March 27th, which is the next point here. but they have backdated everything to March 13th because that's when the president originally said that we were going to do the suspension and set everything to zero. So they've just decided to backdate everything to March 13th that has to do with student loans. So if you have a client whose wages were garnished or their tax refunds were seized after March 13th, you do have to contact the servicer, but they will refund those if your client needs that money back. So just anyway, that's March 13th. If it was done before then, if the tax refund was seized and completed on March 12th, then they cannot get that back. So it's only from March 13th up through now. And then also, I mentioned this already, but the payment and interest suspension was backdated to March 13th instead of March 27th, which is all of the updates and corrections from last week. Summer, did you see any chat come through about any of these
Did have a couple of quick
on?
questions.
All right.
If you receive a Social Security check by direct deposit and do not file a tax return, do you still have to fill out the IRS form?
Good question. You do not. So if you're receiving disability payments or Social Security, they have said that those are automatically going to be direct deposited because they've already got your information on file. So you do not need to fill that out. The only people that need to fill that out are those who have no direct deposit information with the IRS. So for example, you've always paid and you haven't entered any direct deposit information. If you need to update your information, you can do it there. Or if you're not required to file because you earn under the dollar amount, you can update it there on that IRS website as well.
Okay, for the additional unemployment, both how much of that additional 600 and how long it lasts, do the states get to decide that, or is that based on the government?
So it is, yeah, good question. All unemployment is up to the states. I haven't seen any state say that they are not going to be providing that $600 though, because it was left up to the states whether or not they wanted to offer that. But everything that I have read and websites that I have checked have indicated that every state is going to be providing that. There may be some updates in the chat. Some people may say, oh, my state isn't doing it. I haven't seen that yet. If you have seen that, please pop that in the chat and we can bring that up as well.
Okay, and also requirements for job search, just so you know, that is set at the state level. Contact your state unemployment office.
Correct. As part of the CARES Act, though, they did say that you did not need to do the job search like normal. And again, I think every state that I have seen is doing that, where the job search requirement is gone. There may be some states out there that are still requiring it, but most understand that there's just not a lot of jobs available right now.
Mnuchin, the Treasury Secretary, said last night that it wasn't taxable. I assume that means the unemployment, as it's considered economic impact money. Is that something we consider, or should we wait to hear what the agency say?
I think we should wait to hear. I know that this, was he talking about the stimulus money? I must have missed that.
It was
that update.
It was unclear, so that's why.
Okay.
I think from the question.
The stimulus money is definitely not taxable, and he's been talking a lot about that because the deposits are going in right now, and so I think that my guess is that that's what he was talking about, but I would have to check, and we can send out any updates that we get after this.
For those that owe money to the IRS, do they have to get their bank account information for direct deposit submitted by a certain date?
The IRS has not given a certain date for that, but you want to get that done as quickly as possible because they will start sending out those paper checks in May. And so if they start sending those out, if they've sent yours out and then you submit direct deposit information, they can't pull that check back. And so you want to just make sure that you get that done as quickly as possible.
We have somebody who said they didn't get the last recording link. Just go to my.afcpe.org, click on events, and then view my events to get the links to the last recording. Is unemployment paid by the state or small businesses? I think this is like debating unemployment versus the small business.
Right. We'll talk
loans.
about small business help as part of today. Unemployment is always through the state.
We have another. Will student loan interest be capitalized on October 1st? That's been.
No, because it's set at 0% right now. So nothing is being capitalized at this point. They haven't said anything. And so they're just going to sit at 0% until September 30th. And then after that, they just go back to normal. So they have not, there would be no interest to capitalize at that point.
Okay. What about student loan interest from before March 13th?
It, it only capitalizes at certain times. So putting the payment on suspension does not make that automatically capitalize. There are situations that when it would capitalize, but we can do that. That's not, has nothing to do with the CARES Act. We could do an updated webinar at some point about student loans and capitalization. But yeah, that will not happen on October 1st.
Okay. I will note, guys, we have a lot of super specific questions here, so I'm going to try to do a few of them, but then we're going to probably move on.
Yes, we
Veterans,
want to make sure we get through.
right. Veterans receiving disability, do they use the IRS non-filers portal?
Yes, they sure can.
Okay. So FFEL loans held by the Department of Education, are those still qualified? Or I guess the question is, are all FFEL loans now held by the Department of Education, or are they still held by different grantors?
No, they're held by different grantors. So only a small portion of the old FFEL loans that were there prior to 2010, only a few of those are held by the Department of Education. And you can check with your servicer. If you log in, you should be able to see who the holder of your loan is. So if it says Department of Education, then those are on hold. If it's Discover Bank or Zions Bank or Wells Fargo or somebody like that, then the payments are not automatically suspended.
Okay, just a couple of generals to cover a few of these. Guys, it's $600 per week, not one time for unemployment, but it's up to the
Correct.
state. Again, if you have any specific questions about unemployment, call your state unemployment office, and you cannot double dip. So you cannot apply for multiple grants under the same stimulus bill, correct?
Right. Yep. We'll talk about small businesses. The question is going to be about some of those Paycheck Protection program and things like that. We will cover that as part of the webinar today.
Okay, back child support is the one thing where they will take the money. Also, if you've got a bank garnishment.
Correct.
All right. And then anything else for unemployment, I'm just going to tell you to go to the employment office in your state because we don't actually have anything that we can say specifically.
Right.
Okay.
And just a reminder that, as Summer said, don't submit very specific questions. If you got general questions about things, that's fine. But we are not going to be able to take the time to answer like, hey, my aunt has this situation. Is she going to get a check? That's going to be too specific for this webinar.
If a person receives Social Security benefits and does not file taxes, do they have to fill out the form? And if they don't, does this mean that the money is deposited in the same place as Social Security?
So unless they change it on that form, it's going to be direct deposited to the same place that they get Social Security. So that is important to note, that if they want it in a different account, that they'll need to utilize that form to update their information.
And then we have somebody saying that they didn't think that form to update the information was going to be available till Friday. Is that accurate?
No, it's available now. They put that up. It went live. I think it was last Friday. I think they got it up before they initially intended to, or when the date they gave. So it is up and available now.
All right, go for it.
Awesome. Okay. So as a reminder, what I'm going to do is I'm going to go through each different section. We'll then I'll bring my video up and we'll answer questions quickly. We do want to make sure we get through all three portions that we're going to cover today. So we may cut questions off if needed. So I'm going to cover eviction first and rent payments, and then I'm going to move into mortgages after that, the foreclosure and the forbearance things, and then I'll move into small business help after that. So let's go ahead and jump right into eviction. And if you can just save your questions, that would be great. Just, until we get to the end of the eviction section, then we'll make sure that we cover them after. Again, we'll limit the questions just so that we can make sure that we can get through all of the information. All right, so I read a story just a day or two ago. They said that approximately a third of all Americans did not pay their rent or only paid partial rent in April. So clearly what is happening right now in our economy is affecting people. So they anticipate that as a result of the stimulus checks now being deposited, that some people are going to be making late rent payments. But that is important to recognize that this is affecting people, and it's affecting those who are most vulnerable, in a lot of cases, those who are renting. Now, about half of all states have halted all evictions in March and April. So you'll see that the CARES Act only identifies certain ones that allow the eviction to stop. But about half of all states, including my home state of Utah, they have just said no evictions are going to continue. In fact, in a lot of cases, they have just shut down the eviction courts until things open back up. So I know, like I said, for the state of Utah, where I'm from, they just said in March and April, no evictions at all. So you can't evict somebody for non-payment of rent or any other reason, just rent. All evictions have been stopped. And like I said, about half of all states have done that. And then there's a lot of cities, larger cities within the states that have not done an overall eviction stop, that have stopped it within their city. And so it's important to recognize again that the CARES Act is only going to cover a part of them, but a lot of other states are stepping up and saying no evictions whatsoever in the months of March and April. All right, so let's go then through what the CARES Act talks about. So if your landlord has a federally backed mortgage to start, then they cannot start the eviction process right now. We'll talk about the timing for that, but for non-payment of rent, they cannot start the eviction process. Now, this is only for federally backed mortgages, so ones like HUD or VA or Fannie Mae, Freddie Mac, public housing, there's a few others in there as well. But the idea here is that they're saying if you've got a federally backed mortgage, you cannot evict your tenants for non-payment of rent. They also can't charge any additional fees, penalties, or other charges. Now, that doesn't mean that it erases rent. Rent is still due on all of these housing, any of these. These tenants still need to pay rent, but you cannot kick them out for non-payment of rent. Here's the date. Starting on March 27th, 2020, you cannot kick them out for non-payment of rent for at least 120 days. And after that, you have to give them 30 days written notice to evict. You cannot give them the notice after 90 days and kick them out after 120. You have to wait until the 120 days is up, and then you've got 30 days. They've got a 30-day eviction notice after that. So essentially, this gives people 150 days where they cannot be evicted for non-payment of rent. But again, just important note here, it is not free money. So this does not stop rent. None of the state ones stop rent. There has been talk about in the next stimulus bill that is already being discussed about offering additional protection for renters. And this eviction moratorium does not cover, for example, if you're living in an apartment or a house that is paid off, there's no federally backed mortgage on it, you don't have the same protection there. So it's one of those things where it doesn't stop the rent. It's only for those who have who aren't paying rent and who are in those federally backed mortgages. Now, the question is always going to come up: how do you know whether or not your landlord has a federally backed mortgage? The only thing you can do is ask them. One of the things that is so important and that we all understand, hopefully, as AFCs, is that we need to communicate ahead of time with our landlords, if we've got a mortgage that we can't pay, if we've got a loan we can't pay. The most important thing is to connect with them ahead of time and let them know. Don't wait until 10 days after the rent is due. Don't wait until the day the rent is due. Call them and let them know, hey, I've lost my job. I need to discuss an alternate payment plan with you or something. Most people, not everybody, but most people are pretty reasonable and they're going to be willing to work with you. I mentioned on the last webinar that my bank, my credit union, for example, they send out a general email to all of their members, and they said, look, if you're struggling, just let us know. Get in touch. Here's the number. If you've got a rent payment, if you've got a mortgage payment or a car payment that you can't make, even a credit card payment, let us know. We're willing to work with you if you're affected because of the coronavirus. So just such an important point to emphasize as we're talking about both eviction and foreclosure and forbearance, that just get in touch ahead of time. Don't wait until after. Now, landlords can qualify for some mortgage relief. We'll talk about that next. That they have decided that all of the mortgage portions that we talk about in the next section can apply to landlords. So we'll bring that up in the next section. But with that, let me bring up my video here, and Summer will take a couple of minutes and answer some of the main questions that people have.
Okay. Is there any place where there's a list of which states and cities have suspended evictions?
Yes, I don't have a list because it changes daily, so I did not include one at the end. But if you just search on Google or whatever your favorite search engine is for states that have stopped eviction, you will find that, and you can find reliable sources for that.
And since the assumption is most apartment complexes are probably not federally backed, or at least the not are,
Right.
they are not there's no eviction protections there for tenants, correct?
Yeah, not under the CARES Act. Again, if your state has stopped it, then that's a different story. But yeah, most of those large apartment complexes are not. In a lot of cases, they don't have federally backed mortgages. They've got people who invested and others. There may be some out there that do, but Section 8 housing, though, that if it's public housing, that one has been included in this. So if it is public housing, then they are under this same moratorium.
That's all the questions.
Perfect. Okay, let's move on then. Perhaps. Here we go. All right. So let's talk next about foreclosures and the moratorium there. So this does only apply to federally backed mortgages as well. It's a slightly different list than the renter one, but it's pretty close. So you can see, I'm not going to read through all of these, but you can see which ones are included as federally backed mortgages. That just one note that Fannie Mae and Freddie Mac they back about half of all mortgages out there. And so you may not even know that you have a federally backed mortgage. I've mentioned this before. I may have mentioned it in the last webinar. I don't remember or not, but I make my payment. My servicer is my local credit union. So they held the loan. I got the loan through them. They held it, which is pretty unusual, but they are the ones who still hold that loan. But I looked up on both Fannie Mae and Freddie Mac, and it turns out that Fannie Mae backs my mortgage. There is nothing on my mortgage paperwork or anything that says that. So you very well may have a mortgage that is backed by Fannie Mae or Freddie Mac, and you may not know it. Now, if you've got an FHA one, it should say that in the loan somewhere. Same with VA and some of these other ones. But it is worth checking if you've got a client who is struggling. They make their payment to, say, Wells Fargo or somebody like that. That is just their servicer. And so make sure you need to know who the owner is, and you can ask your servicer. Your servicer does have to tell you, but you can also do web searches, and you can look up which loans are held by Fannie Mae and which ones are held by Freddie Mac. All right, so let's talk about then the foreclosure moratorium only applies to those ones that we just talked about. But what happens here is that starting on March 18th, a lender cannot foreclose for 60 days. So they just put this moratorium on foreclosure starting for 60 days on the 18th. And included as part of the act, they said you cannot begin or finalize a foreclosure during that time. So even if there was a foreclosure that was scheduled to be done on March 20th, they have to hold that now for 60 days. So it just puts a complete hold on all foreclosure. And just like with the rent, some states have also stepped up and said nothing in March or April. So even if you don't have a federally backed one, they're saying no foreclosures are going to happen in the month of March or April. Some banks have also stepped up and said that, or other mortgage holders. They've just stepped up and said, we're not going to do any foreclosures during the pandemic. We'll wait and we'll update things afterwards. So again, those aren't part of the CARES Act. You would want to check with your individual state or lender to see if there's any programs in place to do that. All right, so let's talk now about the forbearance portion. So what you can do here, so this is separate again from foreclosure. Foreclosure is, they cannot, that there's a 60-day hold on all foreclosures. Forbearance just means that you're pausing or you're reducing your payment for some period of time. So you can do that under Section 4022 of the CARES Act. You do have to contact your servicer if you want to utilize this. So if you need to put your mortgage payments on hold for a certain period of time, if it's a federally backed mortgage, contact your servicer and they have to give you forbearance. The terms work like this. The initial hold is for 180 days. So you can put that payment on hold for 180 days as long you just have to say, you have to self-certify that it is because of the pandemic. And it can be for any reason. You can have your hours reduced. You can have, maybe you've lost your job. Maybe somebody in your household has lost their job. Maybe you're having to stay home and you can't work as many hours. So if it's related to the pandemic in any form, you just have to self-certify that. So the initial one is for 180 days. Then you can get an extension of another 180 days after that. If, again, you just need to call your servicer, contact the servicer. They'll have some forms you need to fill out, and you'll just need to self-certify that you still need to be on hold for those payments. You need to put them in forbearance. So there is no other documentation. You don't have to submit a note that your doctor said that somebody got COVID-19 or anything like that. So other than the borrower's statement that they need to put their payments on hold for a little while. The only thing that can accrue during this time, during this 180 plus 180 days, is scheduled interest. So again, these payments aren't disappearing. Nobody's paying these payments for you. Interest is going to accrue. They are going to be due at some point. However, the federal government has said that there was some talk about that you would need to make a big payment once the 180 days was up, and they have said no. The servicers need to make allowances and probably just add those payments to the end. So that's what most of them are talking about, is they're saying, okay, if you're taking a break for 4 months, we're not going to make all 4 months due at the same time. We're just going to add an additional 4 months to the end of your current mortgage. So that is what most of them are doing. Now, also, they do have to report the payment as current. So if you utilize this forbearance portion of the CARES Act, they do have to report it as current. That is true for other loans as well. They included language in here that said that if the servicer of any loan puts those on hold for a period of time, they have to report it as current to the credit bureaus. So that's true of student loans. Those are all going to be reported as current. Rent, car payments, etc. All of those are going to be reported as current under the CARES Act. Couple more things on the foreclosure. So it is, again, not free money. You are going to owe that in the future, and just make sure that anytime you make an arrangement with a landlord or with a mortgage holder or any other loan holder, just get any agreements in writing and hold on to those. You just want to make sure that you've got the most up-to-date information there, and that you keep those agreements in writing in case you needed them later on. All right, Summer, that is the end of these sections. Some of them are much shorter. So any questions on foreclosure or forbearance?
Yes, although we may have time for more questions on the checks at the end, because we have not a ton. This one's going back to eviction. If a tenant was already in the process of being evicted when the moratorium was put in place, does that stop the eviction process, or can that be finalized?
Yes, it stops all of them as well. So, but again, it's only federally backed ones, so they have to make sure that it is federally backed. Or if their state has put it on hold, then it should stop it altogether.
And do homeowners still need to make insurance and tax payments?
Yes, absolutely. There's nothing in the law that stops those, so you do need to still make your insurance and your tax payments.
Okay. And so just to confirm, credit score should not be impacted by anything that happens basically in this couple of months.
Yep, they included that as part of there's a whole separate section of the CARES Act that talks about, there was even talk about just stopping any sort of reporting, but they just decided that all the credit scores wouldn't be frozen, but that they can only basically improve during this time. But that's only if you contact them ahead of time, because you can't just wait 30 or 60 days after you're past due on your mortgage and then call them. So those are still going to be reported as late. But if you call them ahead of time, you get that payment moratoriums put in place, that forbearance, then there won't be any adverse effects. In fact, it'll be reported as on time.
Okay. We have some specific questions out here about things that they've heard from their servicers they think is incorrect. Is there anybody that somebody can call to confirm what the servicer is saying is true?
That's a good question. There may be numbers at Fannie Mae or Freddie Mac that you could call, but it's going to be very difficult to get through, or whoever backs the mortgage. It's going to be difficult to get through. But it's one of those things that it may be worthwhile to try to find the section of the CARES Act. I tried to post the sections at the top of this and just go through that with them and see that has been an issue. And I'm going to talk about that in the small business portion, especially, where so much was left up to interpretation that there is some incorrect information out there, and things that the federal government has actually had to step forward and say, you're doing this incorrectly according to the intentions of the law. But I'll talk about that in the small business section. But there's not a specific person to contact, but just try to reach out to Fannie Mae or Freddie Mac if you have a servicer telling you something that is not correct. The eviction portion is pretty short in the law. So even the mortgage portion is pretty short as well. So it shouldn't be hard to read through that and determine what they're doing wrong according to the act.
What is best practice if you think a lender or servicer is acting in bad faith, if you can't really get a resolution now? Should they just be logging everything and tracking it for
Absolutely
later?
Yep, that's going to be your best option, is just to keep track of everything and reach out to, I'm trying to think if it would be the FTC or the CFPB. it wouldn't hurt you to go to either of those two, the Federal Trade Commission, who handles a lot of things around this, or the Consumer Financial Protection Bureau is probably your best bet, is to go to them. They've got advocates there who will advocate for you and for around things like foreclosure or mortgage payments or eviction or things like that. So I would start with the CFPB and then go from there.
For evictions, whether it's versus non-payment or for other reasons you want to evict somebody, is that based on state, or is that covering the CARE Acts for evictions for non-payment?
Right. So it is covered under the CARES Act for those federally backed mortgages. So it does stop it for all of those during that period of time. But again, a lot of states have started things as well. So you could have state laws that are more favorable than the CARES Act. If so, then you would go with the state law.
Okay. Insurance taxes are a part of the mortgage. How do owners pay them if they don't have to pay the mortgages anymore?
Yeah, good question. So it is a separate account, your escrow account is, and you should work with your servicer on that to determine how much you need to pay. So it's not automatically included. Like my loan, for example, I only pay the principal and interest, and I save the other portion, the taxes and the insurance, and just pay those on my own. You have that option, but you'll need to contact your servicer and find out what your escrow payment is, and if you need to continue to make that payment, then you can do that. And you'll set all of that up with the servicer. You have to contact them anyway. And so you would just set that up as a separate payment during those months. Because again, it doesn't stop those, it doesn't delay any of those payments. So those still need to be made on time, just as they always have been.
And it is important to let the clients know that. Clients probably don't.
Mm-hmm.
Also, Jerry made an excellent point that servicers are probably not all acting in bad faith. They're probably just as confused as we are right now.
That's right. Mm-hmm. And in a lot of cases, I was talking with a landlord just recently who, he was very confused about this. And he thought initially he had heard that he was just out that rent payment and he couldn't evict any of his clients and there was nothing he could do about it. And so he was worried because he basically, that's his livelihood is rentals. And so it is very possible that they are just as confused as everybody else.
And then there is some confusion on whether institutions add the suspended payments to the end of the loan or whether they can require a balloon payment. I feel like that was addressed.
Correct. I'll just address it again real quick though. They cannot require a balloon payment at the end, and the federal government has come out and said that they need to, not just because people aren't going to have 6 months of payments ready to turn over at the end. So they have said that they need to do something else, whether it's working with you to add a little bit additional for the next 10 years or just adding them to the end. Most mortgage servicers have just said, we're just going to add them to the end. That's going to be the easiest thing to do at this point.
And I believe that's it for now.
All right, let's move on then. So one last section to cover, and that is going to be things around small business. So small business help. In a lot of cases, if you've got a sole proprietorship or a home business or something like that, a lot of this is going to apply to, so don't just, drop off if you think this doesn't apply to you. Independent contractors, all is included in here. All right, so this is one of the largest sections of the CARES Act that applies to consumers specifically, is anything helping with small businesses. They basically created 3 new programs, and we'll go through each of these briefly. So the Paycheck Protection Program is the first one and the biggest one, and the one that has gotten the most press. There's another one that I've only got one slide on because there's not a lot of information about it. It's the Small Business Debt Relief Program, and it's really only for very specific things. But then this is the other one that has gotten some press as well, the Emergency Economic Injury Loan or Emergency Economic Injury Grant. We'll talk about both of those and how they work as well. So let's jump right into then the Paycheck Protection Program. So the way that this was set up is that the idea is that they don't want all small businesses to just go out of business, right? If things are closed through May or June or July or whenever things reopen, they can't, the concern is that a lot of small businesses are saying, I can't just go for, 3 or 4 months without still making payments to my employees and everything and just reopen after that. I'm going to have to shut down completely forever if this continues. So the Paycheck Protection Program was created to help businesses with less than 500 employees. So the goal of this section of the Act is to retain and continue to pay your employees during the pandemic. So a couple of notes, and then we'll get into some more specifics of the Paycheck Protection Program. You cannot take this and unemployment. So so if you were a sole proprietorship, for example, or an independent contractor, or you're a gig worker like an Uber driver or something like that, if your payments have dropped because you can't continue to do your work, you can't file for unemployment and take the Paycheck Protection Program. So you have to run numbers, determine which one is going to be better. In some cases, it might be unemployment. In some cases, it might be the Paycheck Protection Program. We're not accountants, so we shouldn't be running those numbers for our clients. That's not something that I would do for a client. I would send them to see a tax professional to help run those numbers for them. The loans under this are available through June 30th. And originally it was going to be 4% interest. They have changed that. It is now a 1% interest rate. There's an automatic 6-month deferral, but if things continue to go on, they can extend that. The Small Business Administration can extend that up to 12 months if needed. Now, if it's used for payroll, then it is going to be forgivable. So as long as 75% of the money that you get is utilized for payroll, it is forgivable, which means that the 1%, everything is gone after that. And then up to 25% can be used for rent, interest on your mortgage, and utilities. So you cannot pay the principal on the mortgage. It is only the interest on that mortgage that can be paid with this. Now, there is nothing in the law that says it's split 75-25. So there has been some pushback to the Small Business Administration who is administering this portion of the CARES Act. There has been some pushback where they have said, there's nothing in the law that says it's 75-25. Right now, they've still got that. The Small Business Administration is still saying that. There have been some senators and other congressmen and women who have stepped up and said, no, that is not in the law. If you need to use extra towards your utilities or rent or something, there is nothing in the law that prevents that from happening. But right now, just understand that the way that the Small Business Administration is doing this is that they are saying up to 75%. And that is all payroll expenses. So that means that health insurance premiums, any paychecks that need to go out, all of that can be covered under this portion of the loan or under the Paycheck Protection Program. All right, now sole proprietorships and independent contractors are eligible. So you just you have to go through a bank to do this. So the loans are backed by the Small Business Administration. You do have to go through a bank who has a relationship with them already. And we'll talk more about that in just a moment. Just understand that sole proprietorships and independent contractors are eligible, as well as gig workers can qualify for this. They do need to look at their Schedule C. That is how they're going to determine what their paycheck protection would be and how much they could get under this. It is under line 31 of that Schedule C. But again, we are not tax professionals. You shouldn't be helping people with that unless you are an accountant as well. So just be aware of that. All right, so I want to address a couple of additional things about the Paycheck Protection Program before we move on. So one of the biggest groups that lobbied for this to be in that bill was the Restaurant Association, specifically fast food, because what they decided to do was that if an individual franchise had less than 500 employees, then they would qualify. So unfortunately, it depends on how you look at it. What happened was that companies like McDonald's brought in large groups of lawyers and accountants to come in and immediately submit those loans the first day that they were due. So there are reports out there that the money is basically wiped out for this portion of the CARES Act. There has already been talk about extending that, though, and making more money available. They've talked about even passing a separate law that just gives additional money, or just doing some additional funding from various places. I talked to my banker, who he actually lives right next door to me, and his bank, he's Central Bank, and he run here in Utah, and he's over the mortgage portion and over the small business portion of the bank that he works for. And he said that they have just been flooded with applications. And you can read lots of stories out there about others as well, where he said that he was directed by the Small Business Administration to stop taking applications at this point. So they've stopped. They have said that they are getting people funded still, but they have also heard that the money is basically gone from this section. and that they're not allowed to take any more applications at this point. It could be different for different banks. That was his specifically that was told that they needed to stop taking applications. But these bankers they're working very hard. He was telling me that they work their normal workday, and then from around around 6 p.m. until at least 11, maybe midnight or later, they're processing these applications as quickly as possible. So again, a lot of banks have cut off the Paycheck Protection Program, and they are just saying there's nothing we can do at this point. And a lot of banks are also saying you needed to have an established business relationship with them before this happened. Most sole proprietorships and independent contractors and gig workers, they're not going to have a pre-established business relationship. So a lot of that has been addressed and will continue to be addressed by those in DC, and hopefully some of that will be fixed, and they will fund additional at this time. Summer, before I move on, the Paycheck Protection seems to be one of the biggest sections people have questions on. Are there questions specific to this that I can answer?
So this means that gig workers without registered business licenses, can they apply, or is it probably not worth it?
They can, but at this point, unless some additional money is put in, because what happened is they made it available for small businesses on April 3rd. And they said that independent contractors, gig workers, sole proprietors had to wait until April 10th to submit their application. By the time the 10th rolled around, a lot of them there was no more bandwidth to continue to take applications. So in a lot of cases, if you need money right away and you fit in one of those categories, you're probably going to be better off just filing for unemployment, because there is no limit on unemployment. They're not going to just stop taking applications after 1 million people in the state or anything like that. You will get unemployment, and you can qualify for that if you are a sole proprietor or an independent contractor.
Does the rent and interest you use this for have to be for business property only?
Yes, but that can be a home business as well. So if you work out of your house and you've got a dedicated portion of your house that is for the business, then you can have some of your utilities and the interest written off. Again, work with your accountant, somebody who understands home business deductions. That is not something that we as AFCs should be calculating in any way for our clients. So it's important to understand that they do need to work with their accountant on that. But yes, that can be included as a portion of this.
Can you apply for multiple small business grants and loans under the CARES Act, or do you have to pick one?
And we'll talk about the other two portions as well, especially the economic injury grant. We'll talk about that as well. But there is no double dipping, so you can't utilize utilize the Paycheck Protection and the economic injury to make the same wage payment. So there is no double dipping, but you can utilize that other for different purposes.
So can you see a couple of extremely specific questions if you want to just pre-post those at the end if we have time?
Yeah.
Are nonprofits like churches eligible?
Yes, they sure are. So they can, well, churches, anytime that it's a church or proselyting, there are different rules under there. And so that's where you'd want to talk with your bank and just understand the exact rules. But most nonprofits would qualify under this as well.
If you had somebody who was doing unemployment or had two jobs, a job and a side gig,
Mm-hmm.
and they were getting unemployment from the job, does that now make them ineligible for this for the side gig?
Not necessarily. No, they may be able to utilize this for the side gig. They would utilize, what they got on as their net profit on line 31 of that Schedule C. But it does, as long as, again, they're not utilizing it for the same job, because again, you can't take unemployment and utilize this. So if you've taken unemployment for your main job, but you have a side gig, you could qualify for this as well. But you would work with your local banker on that, who's part of the Small Business Administration.
Okay, one quick question, because I'd seen this before too. Some news sites are reporting that these loans are entirely forgivable. Is it the whole loan or just the interest that's forgivable if it's used for payroll?
No, the entire loan can be forgivable if it's utilized. So you can get up to $10 million for one business. There are some exceptions to that. So if any wages over 100,000, so if you've got, an executive who's making 150, that you can only have up to $100,000 of that forgiven under this. But there are, the entire loan is forgivable at that point. So you've just got to make sure that one of the big portions of this, though, is that the idea is to retain employees. So you can't just fire all your employees, take this, and and utilize it. So that they're going to utilize a calculation based on how many employees you had last year at the same period of time, or from January 1st through, I think it's February 15th. As long as you're retaining the same number of employees, then it's forgivable. If you have released half of those employees, they're furloughed, or they've been fired, or they're just not working for you anymore. So if you had 10 employees and now you've got 5, only half of that loan is going to be forgivable. So the idea behind the Paycheck Protection is not just protect you and the wages of the person who owns that business, is to protect the people. Because the idea is, can we keep people working? Can we continue to pay them? And then as soon as everything opens back up, they can just walk right back into the job. That's the idea, is so that I was just, a lot of people need haircuts right now, for example, and a lot of hair salons are closed, and barbershops and things like that. And so the idea is, instead of firing them and furloughing them and just saying, sorry, we can't pay you right now, they take this Paycheck Protection program. You continue to pay your employees as though they were working. Even though they can't go into work, you continue to pay them. And then as soon as everything is over, you just step right back into the job.
And then a quick question from evictions: can landlords require a balloon payment after 3 months of suspended payments?
Under the way that the CARES Act is written, they cannot. And again, additional states have changed things to where they won't allow that either. They have to set up a way to pay that back reasonably over time.
Okay. And then we have one other question, but we'll save that till the end.
Okay, perfect. All right, moving on then to the other 2 sections of the small business help. There's just one slide on this, the small business debt relief, and then we'll move on to the other portion. So the way that, there's just one bullet point here. So you can get up to $5 million in capital if you need to purchase real estate, buildings, and machinery during this time. So if that is something that you have need of at this time during the pandemic, then the small business debt relief is available for that. There really hasn't been much information put out there about that, because not a lot of people are purchasing real estate, buildings, or machinery during this time. But if you are, and you have need for one of those things, or if you have a client who does, then they can get some help under here. There just hasn't been a lot of information. So they would want to contact the Small Business Administration if they fall under that portion. And that's really all I know about that section. So, all right, moving on to the Emergency Economic Injury Grant and Loan. So basically what this is there is a grant available and a loan available to help businesses during this time. So the idea is that there's these economic injury disaster loans have been available for a long time. The Small Business Administration has had money available for funding through various programs that they have. And this is an old loan program that is in place. They were given additional money to expand it during this time, but this is a loan process that you do not have to go through your bank. This is directly through the Small Business Administration. And there's a link at the end as we look at the resources that you'll see where you can utilize the money from this and get to that, but where you can apply for this. So the interest on this is higher than the Paycheck Protection Program. The interest is 3.75 if you are a for-profit business, 2.75 if you are a not-for-profit business. And this is an interesting portion of the act that was included. They said that you could apply for this economic injury disaster loan and take an advance of $10,000 that does not have to be repaid, even if the application is denied. So the way that the law was written, they said as long as you put in an application and you mark the box that says, yes, I want to be considered for this advance of $10,000, then they are supposed to pay that out even if your application is denied. This has caused major angst for the Small Business Administration, and they have received millions of applications for this $10,000. And they are saying it is taking them weeks and weeks to even get to those. And they tried to change and say you could only get $1,000 per employee up to $10,000. They got a letter from 4 senators who said that is absolutely not correct. You need to change that. And they originally had said it's not for independent contractors and sole proprietors. Again, those senators came back and said that you are incorrect. This $10,000 is available for anybody whose business is struggling during this time. So the Small Business Administration is still trying to figure out this portion. This is the grant that is available, is that $10,000. So they've said that they're working on it and that people are starting to get that $10,000 and that it does not have to be repaid. So the idea is that you can utilize that $10,000 or additional from the economic injury disaster loan to keep employees on your payroll, to provide sick leave, meet increased production costs, or pay other business obligations. But again, as with any others, you cannot double dip here. So you can't do this and Paycheck Protection Program or this and unemployment. You've got to choose which one you want to go with. So for example, I know a sole proprietor who, she's here in the state of Utah where we don't have a complete stay-at-home order. It hasn't been shut down completely. So her business is still open, but nobody's coming in for appointments. And so she's losing money, she's losing rent money. And instead of, she looked at unemployment, but because her business is still open, she didn't initially qualify for that. She may now. But what she looked at was that she's now put in an application for this $10,000 because as a sole proprietor, she's saying, if I could get that $10,000, I can keep my business open. She knew that it was going to be difficult to get the Paycheck Protection Program, so she's applied for this. She hasn't received word yet. They haven't processed her application. But anybody, so real estate agents, anyone paid by a 1099, sole proprietors, you can qualify to get that $10,000. And right now they're saying that that money is still available. So if you've got somebody in that situation, it is worth at least applying for it. It's not a long application process at all. A couple of different things. When it comes to small business help, I am not an accountant and most of you are not either. I'm going to give you some general direction here that you could utilize with your clients, but you do want to be cautious. So in most cases, just encourage people to apply for that $10,000 if they qualify. It's a grant, it's written off, it's not income or anything like that. It is just going to be a grant to help keep the business open during that time. And that, again, that's true for small employers as well. So if you teach, let's say, piano lessons out of your house and you don't have any students coming because you can't have people at your house right now and you're not teaching online, you would qualify for this. So have them apply for that. If you do want a loan, go with the Paycheck Protection Program as long as there's additional money given there, because that's a 1% interest rate on that, and it is going to be forgivable at the end as well. You can refi that economic injury disaster loan into a Paycheck Protection Program. So if you can refi that into there, and that'll be forgivable under the Paycheck Protection Program. Because again, the EIDL is not forgivable. The first $10,000 advance is, but the additional is not. And so you can refi that into there. I've read a few articles about this. They have recommended that any grant money that you get from any of these programs is put into a new separate business account, and you just account for every single penny that is spent, so that you know that this section, this $5,000 went to pay this employee or these employees, or went to pay our medical expenses or whatever. So make sure that you're keeping track of that, and they're not intermingling these funds until everything is over and it's been forgiven. You just want to make sure that you're utilizing a totally separate account and keeping track of all money for that. And then just a reminder, I've mentioned this already, there is no double dipping. So you need to make sure that you're not utilizing the Paycheck Protection Program and the economic injury loan to pay the same rent payment or the same employees or anything like that. You cannot double dip in any of these programs. All right, Summer, looks like we've got a few minutes. So I'm going to go through these resources real quick. I'm not going to read through all of them. I'm just going to point out a couple of them. They are all linked. So once you get these slides sent out to you after, you can just click on the link. Like this is the IRS website for non-filers. I've got 2 pages of these student loans. This is the full text. Somebody asked for that at the beginning. This is the link to the actual text of the CARES Act. And then there's things from the IRS here. You've got foreclosure and forbearance from the Consumer Financial Protection Bureau, general links to their blog where they're adding a lot of information about some of the portions that affect consumers. And then this page goes through, this is more about the small business thing. So there you've got the small business owner's guide to the CARES Act. That is from the Senate. They've put this guide out so you can utilize that. Got more information about each of the various programs, including the EIDL and PPP side-by-side comparison. But again, when it comes to some of these things, you're going to have to work with your banker or your accountant to make sure that you're utilizing the correct forms and everything. So Summer, with that, what questions do we have coming in?
So first, the AFCPE completion code is CARING 2020. That's CARING 2020. Spaces don't matter, or capitalization doesn't matter, but spaces do. No spaces. CARING 2020. Okay. What if employees leave businesses on their own because they could get better money from unemployment for some other reason? Does that count against the business owner?
It essentially does. So I'll just give you a quick example of a story that I read just the other day. There's a guy, I think he's out of Pennsylvania. He owns a sawmill and he has about 750 employees. And his employees started coming to him and saying, "Hey, I could get more money if I went on unemployment right now." So basically, he said that about a third of his employees voluntarily left, and they're taking unemployment instead because they're getting paid higher wages because of unemployment, because of that extra $600. The issue is that he is now, about half of his employees are gone, or about a third of his employees, he said. And so he can still get money under the Paycheck Protection Program, but it is going to affect him. Even though they voluntarily left, it is going to affect him. So he's tried to hire more people, but people are saying, I can stay home and make more money, so why would I come and work for you at this time? So he's having struggles to hire people. But yes, he would qualify, but he's going to have some issues when it comes to having that forgiven later on.
If you try one bank and they say that they're not taking any more loans, can you try another one?
Yeah, you sure can. In a lot of cases, they're saying that you do have to have an existing business relationship with them, but it is absolutely worth checking with other ones and seeing if they are available. You can go to the Small Business Administration website. You can look up which banks have a relationship with them, and you can certainly check and see if you can submit an application through another bank.
How do independent contractors file for unemployment since they haven't paid into it?
Right. That doesn't matter as part of this law. So the way that the CARES Act was written is that even if you haven't paid into it, you can still qualify for it. So it doesn't matter that you haven't paid into it or an employer hasn't paid into it. You still qualify for unemployment. And I know people who are in that situation and they are receiving that unemployment. And in a lot of cases, the $600 wasn't initially paid out. I know the state of Utah is now paying that $600, and they did a back payment for everyone so that as of week one, they were getting that $600. So in a lot of cases, you don't have to pay into it. That's irrelevant according to the CARES Act.
Okay. Are any of the loans, like the last slides, are those available to landlords as well? And if so, do they have to have a LLC or any kind of, if they have to be established as a business?
No, they sure don't. So they are eligible to apply for some of those things. So the Paycheck Protection specifically and the Economic Injury Grant, they talked about those both being available for landlords and others. So yeah, you want to check on both of those.
And so even those that operate out of their own homes can also qualify.
Correct. They sure can.
Okay. Can you apply for unemployment after August under the CARES Act? I guess, is there a deadline for the unemployment?
Yeah, so the $600 extra payment ends on July 31st, and unless something is extended in a different stimulus act, that $600 will end then. The extended benefits, the 39 weeks for most states, go through the end of this year, but right now the $600 is scheduled to expire on July 31st. I would anticipate that if the shutdown is still going on, then that they will extend that. But as of right now, the CARES Act ends that $600 on July 31st.
So is there separate funding for nonprofits and for-profits, or are they all competing for the same dollar pool?
They're all competing for the same dollar pool.
Can you request, if you need less than the $10,000, should you ask for less than the $10,000, or should you ask for the full $10,000?
The way that the application is set up is that you just check a box that says I want to be considered for the $10,000 advance. So I'm sure you could turn down additional after that point. But as of right now, you just request the full $10,000 and they consider you for that. Because what happens is you're putting in a loan application. And so you have to apply for that loan first. It's only like 2 or 3 pages. It's a very short application. You have to have information from your taxes and various things like that, your profit and loss statement. You don't have to submit it, but you have to have information from that. So you submit all of that, and then there's a box as part of the application that says, I want to be considered for the $10,000 advance. You check that, you submit the application. What they're saying is even if you're denied, you should still get that $10,000. So we'll see what happens, though. I don't know anyone that's received that yet because of just the sheer volume of requests that they have.
And so the reason they need to keep the money separate is because even though it's a grant, if somebody doesn't actually need it, there may someday be a requirement that they pay it back.
There could be. Right now, they're saying it's just a grant for small businesses and that there won't be any sort of pullback on that. But I would just be cautious and make sure you're utilizing it for business purposes until everything is cleared out. And then, you just make sure you're keeping that separate and just you're keeping track of everything that you're doing with it, because there could be. I haven't heard of anything. There's nothing in the law that says they're going to pull that $10,000 back for any reason, but I would always be cautious when it comes to things like that.
We're almost out of time. Do you mind staying on for a few minutes to answer a few more questions?
No, I can do that. Let me just pull up a couple more slides here.
Okay.
If you are a consumer on here, you can reach out to get help from an accredited financial counselor right now. So this is the link to find one. And as Summer mentioned earlier, you can get free financial counseling right now. So I'll bring that up here. That's through the Wells Fargo Foundation, and in partnership with the Yellow Ribbon Network, we have this opportunity as AFCs to help people who have been most impacted by the financial implications of this. So if you pass the exam, or if you're an AFC or an FFC, is that correct, Summer?
Yes.
Okay, you qualify for this. Summer has posted the link a couple of times. This is the email that went out initially. You can see information on there as well, but she has posted the link in the chat box, and you can get that there. And then here is the completion code phrase again, Caring 2020.
And if you just go
with that, I'm happy to answer. Sorry, go ahead,
Oh,
Summer.
that's okay. If you just go to the AFCPE website, you can also just type in the search box COVID-19. Turns out we have a really good search feature. That's how I found it. People have asked if you get CEUs for both the last week's session and this week. Yes, you do get CEUs. You have to submit them separately. Use this code phrase. We have two separate ones. Although the IRS link says non-filers, I'm guessing for updating all of their information for the stimulus checks, that's for people who don't have bank information submitted, even if they have filed, correct?
That is correct, yes. So if they filed before and there's no banking information on file with them, you can do it through here as well.
What a fascinating question. Would medical marijuana businesses be eligible for the economic injury disaster loan?
I think if they're legal under the state, then they would be. So, yeah.
With regard to the payroll protection, do you have to rehire them once this is over if they voluntarily quit to get more money via unemployment?
Say that question again. It seems like we're mixing the paycheck protection and unemployment here. Yeah.
I think separately from this, if somebody quits, do you have to rehire them if they chose to quit once all this is over?
Oh, no, you don't have to. If they chose to quit, then no, you certainly don't have to rehire them. There is nothing in the law that requires that. So if they left to take unemployment, and you can get unemployment, for example, if you say, well, I need to be home with my kids now, so I'm quitting my job. In a lot of cases, they're just saying, oh, I'm worried to be at work, so I'm quitting in order to take unemployment. There is no requirement at all that you have to rehire that person. So that's a good question.
And is somebody qualify for unemployment if they just don't feel comfortable working, even if they could be working?
Yes, they sure do. Okay. And that is the case in some places have stayed open and the employees just don't feel comfortable working. They're concerned about being exposed, especially if they're immunocompromised or they have somebody in their household who is. Then yes, you can receive unemployment. Just work with your employer though on something like that, and talk to them and help them recognize why you need to leave and what's, if you've got a child at home who's immunocompromised, you work at, say, Costco or something like that, you might be better off quitting for a little while or taking a leave of absence of some kind and getting unemployment for a little while this is all going on.
For mortgage forbearance, where does one start the process? At the servicer of the loan?
Servicer. Yep. So if I needed that, for example, I would go directly to my credit union. I would call them, can't go in to see them. I would call them and start that process through them.
Okay. If for that $600 unemployment extra, does that apply to only people who are unemployed after the law, or does that apply to people who are previously unemployed and still
no,
getting
it
benefits?
should be everybody as of the date they started that $600. So it's not just new unemployment claims. It should be others who are on unemployment as well.
If a business applied for one of the loans but realized they would have benefited more from unemployment, can they cancel their loan request?
Yeah, so we'd be looking at a small business owner at this point, somebody who's working for themselves. So yes, they can, you don't have to take any of those. So you could turn that Paycheck Protection program, or you could decline the loan, or that once they give that to you and file for unemployment instead, that would not be an issue at all. In fact, the Small Business Administration has talked about that and said, these are loans, even though they're forgivable loans in a lot of cases, they are loans. So if you're better off doing unemployment, then you can decline these loans once they become available.
Um, Someone that says they've heard conflicting information about gig workers being able to get the additional $600 for unemployment. Are they eligible?
Yes, they sure are. In fact, that was written into the law that gig workers and independent contractors and everyone was eligible for that $600. So that under the way that the law is written, they are eligible. Now, again, state by state can be a little bit different. So your state can decide that maybe gig workers aren't qualified. I think they would get some pushback from the federal government if they said that. But according to the way the law is written, everybody can get that $600 additional.
If someone quits because of immunocompromisation concerns or anything else, but they were given telework options and they quit anyway, can they still qualify for unemployment?
No, that's a really good question. So I've got a family member in that situation where she was working at a credit union. She was working inside in the lobby or at one of the desks there, and they branch shut down, obviously, so they're still doing everything online, and they gave her the option to telework. She chose not to take it because her kids are at home, and so they said because she had the option to telework, that even though she's mainly taking care of the kids now, that she did not qualify for unemployment. There are some states that are pushing back against that as well and saying, well, people can't just work from home if they're taking care of their kids. So it's always worth submitting an application and seeing if your state is perhaps more generous than this family member's. So it really depends on the state. I would encourage them to put in an application anyway.
All right, last question. If a client tells you they worked off the books, is there anything that they could possibly qualify for?
No, there's really not. If you're working off the books, then there's no record or anything, so you're not going to qualify for anything at this point. And that's that circles us back to the stimulus money and some other things. If you're paid off the books and you're not, you don't have any sort of social security number or anything on file, basically you have to really step forward and say, I qualify for this money. If you don't file taxes or you don't have social security or disability, you really have to step up and say they can only do so much work to find every single person in the United States who doesn't qualify, who's under the payment limits or something like that. So you're going to have to step forward and say, here I am, I want my money. Here's I'm submitting my information to the IRS here. But yeah, if you have a taxpayer identification number or you're working here illegally or something, you're not going to get a check. And that has been addressed by some people are concerned about that, especially those with ITINs who are paying taxes and will not get the stimulus money. That's been a big concern to a lot of people. So we'll see if something changes with that. But as of right now, they will not be getting any stimulus money.
And we have somebody say that they heard that if people quit because they're caring for children at home, they may qualify. That's why you go to the unemployment office, because every state is different.
Exactly. So the state that this family member works in, which happens to be Utah, that they're here as well. They're just saying, since you had the option to work from home, that you don't qualify. But again, they're getting, I think the state of Utah is getting some pushback from the federal government saying, no, if somebody had to quit to take care of their children, then they qualify. So she may be able to qualify here in a couple of weeks if they change the rules, but state by state is different, and they can change things according to the state.
And we have somebody say that 2 different webinars had different answers for this question. So can full-time employees who are gig workers apply for unemployment just for the gig side if they're still employed full-time?
So if you're still, okay, so you have a regular job and you're a full-time gig worker, is that what they're saying?
I think like a part-time. So they have a side
Part-time,
gig. They
yeah.
lose the side gig income.
Okay. Yeah. So that would be the case for a lot of people. Like I know somebody who he works a full-time job and then he drives for Uber up in Park City on the weekends. And so what they're saying is that you qualify for one of the things for one of those. So for example, you may be able to qualify for very small unemployment, because if you're still getting paid, you have to submit information about how much you're getting paid now. So if you're over certain limits from your day job, you're probably not going to qualify for unemployment in most states. You may in some states, but in most states, you probably won't qualify if you're still working your full-time job. If you are, you may be able to, however, get some Paycheck Protection program for that gig job, or you may be able to get that economic injury loan. And so I would check with a banker, I would check with your accountant and see which one is going to be best, because yeah, in some cases you wouldn't get unemployment because of that, but you could still qualify for the others.
Somebody wants to clarify, small
Mhm.
business owners who applied for the various programs don't qualify for the additional 600. I'm going to assume that means if they accepted the loan, because they could reject the loan and still get the unemployment.
That is correct.
Okay, so if you accept the loan, you do not get the unemployment.
Right.
And then if a side gig is not every single year,
Mhm.
so they, for example, got income last year or this last year, but not in 2018, can they claim unemployment?
So if they got it in 2018 but not 19, that's a good question. I don't know the answer to that. That would be one of those situations where I would check with the unemployment office. I know that they said seasonal workers qualify. So if you normally would be working during this time, maybe at a ski resort, or I guess it's spring now, so whatever would be seasonal employment in the spring, they do say that seasonal workers, but I think you had to have worked the same job in 2019. So I think if you stopped doing that in 2019, but you were doing it in 2018, I don't think you would qualify because you haven't done that job now for a year. So I would
Okay.
assume that, but again, check with the unemployment office.
I think the main takeaway from here is if you're not sure about unemployment,
Yeah,
always check your state office.
correct.
Okay. Um, so then I think that's all the questions related to this content. If anybody has any questions about the Yellow Ribbon Network or about that opportunity, please contact COVID-19@afcpe.org and we can help you with that. Otherwise, Ryan, you did a great job. Thank you so
Thank you.
much. And thank you for all for
Absolutely.
coming.
Okay, thank you.